Today's episode is sponsored by Wells Fargo Advisors Financial Network FiNet, member SIPC. FiNet is focused on helping independent advisors support their clients and reach their goals with unique, ever-evolving solutions and resources from one of the nation's largest financial institutions. Learn how you can get more with FiNet at wfa.com/independent. That's wfa.com/independent. Welcome to the WealthStack podcast. I'm your host, Shannon Rosic, the director of WealthStack Content and Solutions. In this episode, I'm joined by Eric Ervin, CEO of Onramp Invest. And today's topic, making the digital asset investing ecosystem accessible. Eric, I am so thrilled to be speaking with you. Thank you so much for coming on the podcast.
Yeah, thank you. I'm really looking forward to it.
Absolutely. This is going to be a good conversation. But before we dive into the first segment, I do want to start with your background and what ultimately led to the founding of Onramp Invest.
Yeah, so I started as an advisor at Morgan Stanley back in the 90s. And I went to school for computer science and finance. So I was always like a little bit on the nerdier side of the investment world, and did a lot of alternative investments for our clients. Our clients weren't like billionaires, but they were pretty wealthy, like in that $5 to $50 million net worth. So we had access to just a ton of great vehicles that we could invest in. But unfortunately, like the minimums and all of the requirements, I mean, I couldn't even personally invest in these things. So they were really great investments, but unfortunately just not eligible for a lot of people. So in 2012, I left and I started a company called Reality Shares, which is an exchange traded fund business. And the idea there is how do we make these really great, awesome alternative investments, accessible to everyone, and really kind of democratizing that piece of it. And unfortunately, in the ETF world, there's just so many things that you can, do, and so we built a really nice business there, but it was interesting to see how much money and time and administration was spent on the back office side of things.
I'm sure.
And I mean, we were spending millions of dollars on fund administration and custodians and transfer agents, and we were faxing our Bank of New York, I was like, how am I gonna take the fax, and so it just dawned on me, like, there's got to be a better technology. And this is around 2016, and so I got really excited about blockchain technology and kind of what it could do for the fund admin business. And so I started two businesses. One was a hedge fund business called Block Force Capital. So, kind of quantitative investing in digital assets. That was really just a way to get our hands dirty and kind of just dig in and learn the space. And then Onramp was born out of kind of this pain of, people want to get allocated to the space. They want to play around a little bit, but they don't want to like do all the brain damage of learning everything and opening 10 different accounts and taking a picture with their ID and holding up a piece of, it was just like nonsense. And so that was really the idea behind Onramp, is let's just make it really easy for people to get allocated to the space, to dollar cost average, build a portfolio, automatic rebalancing, like all those things that advisors are really used to, but they just couldn't do for kind of crypto assets and digital assets to speak of. So that's really what brought us here today.
Fantastic. I'm still kind of laughing to myself about your brain damage comment, because that is so that is so true. So if you wouldn't, it really is. But if you wouldn't mind, if you could just give our listeners just a quick overview of Onramp Invest, what's the mission and who you ultimately serve?
Yeah, so it's a really like a turnkey asset management platform for digital assets. So giving the financial advisor and the asset managers, the big money managers like WisdomTree and others, the ability to kind of serve their clients in the digital asset space. So advisors can open client accounts at qualified custodians. They can manage those accounts with a discretionary management, and then they can allocate to model portfolios offered by, professional asset managers. And really kind of that whole ecosystem is just connected now. And then we pipe it all back into the advisor's existing technology stack. So their CRMs and their portfolio management software and all that. So they can manage a Bitcoin investment just like they could manage Apple or IBM or an ETF investment, and have it all kind of in one place. That's really the mission is just, how do we make all this stuff really easy so everyone can invest? And so advisors no longer have to say, sorry, I can't help you. And that's really what I, just got so frustrated about, was because clients are putting a lot of capital into this asset class, and
Right.
many of them are blowing themselves up, and they would love to have a financial advisor, but most financial advisors just aren't equipped until Onramp. So
Absolutely. Well, that's fantastic. And I appreciate the background and the context there. But I do want to dive into our first segment that I affectionately call Stats All Folks. And since we're talking about the digital asset investing ecosystem, we have to cover tokenization. And tokenization is actually projected to reach around 16 trillion potentially by 2030. And, institutions and fund managers have wanted to tokenize assets for some time, but it's really been a matter, like you said, of infrastructure catching up and having the technology behind it. So could you just briefly define tokenization and what are the opportunities when it comes to the digital asset landscape with it?
yeah, sure. So it's like you said, it's massive. If I think crypto assets were really the first kind of proof of concept of blockchain technology, where you could now create value, transfer it between two people or two machines or whatever without any intermediaries, no bank otherwise. So that was like this real breakthrough moment. It was like really kind of this first major innovation in financial services that hit. A little bit like the ETF was the S&P spiders, the SPY, S&P depository receipt. So what it was I give you these 500 companies shares. You give me a receipt, which is the ETF, and I'll buy and sell the ETF at will. And then eventually, when I'm done, I will hand it back to you, and I'll grab those shares. Right. So this thing was done with spreadsheets, with emails, with all of these like crazy old-fashioned technologies. In a new modern world, it's the exact same thing. So a real estate asset or anything can get a token or this receipt, and that can trade electronically now amongst parties and be used for collateral. It can do like all of the things that you would do with an ETF. It's exactly the same thing, but now you can do it with really all assets. So it'll start with the fund business, I think. So a lot of funds will get tokenized. You're seeing Wisdom Tree, Franklin, like tons of fund companies are tokenizing their shares. And it's just because it adds so much more utility to the end user. And you imagine like ACATS, which is the account transfer process. This could all be done like in a minute or in a second, really. Like that's the power of tokenization. So crypto, about a $2 trillion asset class, but the world, is tens of trillions, if not, many, many more times that. And that's kind of the big move. Citi just put out a piece, which is some of the stats that you were mentioning. It's like a 160-page report on tokenization of everything, really. So that's like a long-winded answer, but that's kind of how I look at it. It's a very, very big innovation, really.
Sure. And you know why the concept of tokenization isn't necessarily new. It's really that tech gap that's closing ultimately. And I know Bank of America recently reported that the tokenized gold market surpassed around $1 billion in value recently. And that tokenization of, what we call real world assets is a key driver of digital adoption. Talk to me a little bit about those real world assets and why that's ultimately the case.
Yeah, and another like we're pretty fortunate in the US. We have a very like robust financial system. But again, it was all built on like older architectures. A lot of the
Yep.
banking system is built on COBOL, which they don't even there's no programmers alive that even know how to code in COBOL. So and it still works, but it's kind of janky. And just like the telephones, we have wires going all over the place. Well, in China, they just jumped right to cell phones. They completely leapfrogged that because they didn't have any of that legacy technology. This is a little bit like that, where we're still working on the old technology because it's pretty good and it works.
Still
And
works, right?
so it's hard for us to like get our brain around, oh, there's something much, much, much better that's just so much easier. It's probably like a third of the GDP of the financial services industry is spent on administrators and again like reconciliations, because there's no general like distributed centralized ledger of who owns what. That's really what the power of a lot of this kind of blockchain and technology can be, where Citigroup and Goldman and Bank of America and everyone just refers to the same ledger, the same data, the same. And so now I don't even necessarily need a custodian. I can just own my assets directly And if I want to transfer them to this financial advisor or that financial advisor, I can do that. And it's not like held at Schwab and my financial advisor takes care, it's really, it can literally be on the blockchain. So that's kind of this novelty. And I think a lot of it will be behind the scenes. Most people won't even know what's going on, but it's the big banks and the infrastructure companies that are going to be the big winners in this.
That makes absolute sense. But speaking of banks, I have to pivot a little bit and ask about interest rates and how they've impacted this space. Obviously, it's been dominating the headlines for the past several months. What are you seeing there in terms of digital assets and how rising interest rates have impacted it? And what's been the market reception?
It's I guess like from the macroeconomics side of things, interest rates go up, that's less money in the economy. That's not ever a great thing for business and investment. But it's also created a lot of opportunity where, one thing we saw with the banks, speaking of banks, with the challenges that we had is now a lot of these major corporations are looking for a safer place for their assets. The bank is not necessarily the safest place. And so you're seeing these money market funds that are generating great yields, 4 or 5%, and they're in high demand by these corporations, but the corporations don't want to be stuck with one institution. And so this is the benefit of like, again, the WisdomTree's Treasury Money Market Fund or Treasury Fund, and Franklin has one, and they're seeing like potentially tons of assets, trillions of dollars of potential assets that could come into this because of the higher interest rates, the fungibility, like it's easier to transfer back and forth. They can do more with it. They can use it as collateral. They don't have to like have it in the bank and potentially get fired from their bank. And there's just it's caused a lot of disruption, which is almost the thing that needed to happen to create like this need for change.
I would have to agree. And candidly, I got into what I would call very rudimentary crypto investing during the pandemic, both just out of boredom and a little bit of curiosity. And, while my parents think I'm nuts, it seems like my generation, the millennials and Gen Z, genuinely have an interest in the digital asset market. They want to be educated on it. They want to know more. They want easy access to it. What trends are you seeing here, and how could this potentially impact the, $60 trillion wealth transfer that's kind of just been looming, and it's coming down the pike soon?
Yeah, it's so funny. I get I kind of get goosebumps when I think about it. This is the smartest generation in history, like the most educated generation ever that has ever, and they're curious and they want to learn and they want to play and they want to get their hands like on something and try things. And so that's why I think crypto was so it just caught the moment. It was like, it's so cool and innovative and like against the man, and it just has like a lot of great vibes associated with it. So there's that, but then there's also this idea that like the relationship between a financial advisor and a client in this kind of new client is going to be, it's going to have to change, because I don't want to go to my father's financial advisor, right?
Right.
And especially if my father's financial advisor can't use any of the same like things that I use, can't understand what I do, what I want. So if anything, like I think right now, the advisor that says, all right, let's play around with some of this technology. Let's learn it. I mean, you don't have to become an expert because it's only going to be a small allocation. But if you can just say yes to the clients, I think you'll actually start to win some of those younger generation over. For one, I used to, in the 90s, I was a financial advisor, right? And especially in San Diego, Qualcomm was like doubling every day, it seemed. And everyone, from the retirees to everyone sell everything, sell the bonds, buy a Qualcomm, put it all in Qualcomm. But as a financial advisor, it's like, come on, that's nuts. And yet Qualcomm would double again. And so you started to look dumb to the clients. And I remember just thinking, let's just, let them have some dessert, but make them eat their vegetables and potatoes and other things too. So
Sure.
of course, yeah, Qualcomm looks like a great company. How about we put 5% in Qualcomm? And then the clients didn't end up hurting themselves by leaving and going into, all tech stocks right before the big crash. So I think these are the big things where like our industry really needs to kind of wake up and say, you're not putting this genie back in the bottle. It's here. So you might as well just like start to embrace it, and you don't have to go crazy. You can just allocate a small amount, and that's the, so there's this like emotional attachment to the investment. So that would definitely be my advice if I was an advisor again. I'd just be calling, who handles your Coinbase account? No, oh really? And just hoovering up clients from and again protecting them, because this is like there's a lot of money lost in the last year, and several years before that, and several years. So there's a huge opportunity to help right now.
So are you hopeful, this makes me, think about financial literacy on both sides as an advisor and an investor. Are you hopeful, for now in 2023 and even beyond, that there will be more education, more proactive outreach and understanding around this space? Because, at the end of the day, there's still very much hesitancy around something that's new, something that's volatile. And obviously the growth-minded, forward-thinking advisors are, like you said, embracing it, calling up, saying, where's your buddy? Are you using Coinbase things? Where can we fit this into your portfolio? But there still seems to be a bit of a gap in terms of education around all of it on both sides of the coin.
Yeah, and it's a little bit like biotech or tech, like some weird new novel technology, or you don't have to, if you're the financial advisor, even if you're the kind of the more investment oriented financial advisor rather than more of a planner, you don't have to understand every single new drug discovery, and you just need to understand, like, generally speaking, things go up and down based on this, and we're going to diversify and follow like all the basic things that keep you out of trouble. You can do that here too. So there's we work with CoinDesk and a number of different kind of professional organizations to build indices and to really like professionalize the asset class, so it's not so scary and it is more approachable. So you can invest in sectors in the asset class. You can invest in broad-based indices. You don't have to learn everything about every single protocol, but if you want to, then it's again, it's like a zoo of information. And so with Onramp, we built the Onramp Academy specifically for this purpose of, you get kind of what you need. There's primers, but if you want to go deeper, you can, but you don't need to go deeper, because again, it's a thing that goes up and down and it doesn't really behave like the traditional asset classes. So that's usually a good thing. And then you can go deeper on like, well, what am I really buying, and how is this different than that? And then that's just crypto. Now, when you take into account like our recent partnership with Securitize, so KKR and Hamilton Lane and these companies are now tokenizing their private equity funds. So you can get access to, because again, all this technology improves the cost structure. So now the minimums come way down. So now the average investor can start to get access to some of these really cool private equity funds. And that has nothing to do with crypto. It's just, we're using blockchain technology in order to make it more accessible. So I think maybe that's going to be the use case where we start to educate the advisor community about that type of, it's not just the Wild West magic internet money, and then they can start to like really appreciate that there's way more to this than again, kind of just hype and insanity.
That's a good way to put it. Hype and insanity. So just at a high level, what advice could you offer to advisors on how they should be talking to their clients about this space? I'm a believer at this point that advisors really need to embrace this space and digital assets in order to be successful in the future.
Yeah, it's, from my perspective, again, kind of thinking about it like an asset class. So there's and again, it's almost like a technology. You're investing in a new tech sector in a way, right? This is when you invest in, just to use the cryptocurrency theme for a second, when we invest in these tokens, what we're doing is we're essentially buying a piece of a network. And if you could have assume there was a penny for every email that was ever sent. That was like, if that was the concept, we buy a piece of the SMTP protocol, and we own a piece of every future email that ever gets sent. We own like the revenue on all of that traffic, that the tolls essentially to travel on that network. So if you're investing in kind of a technological innovation, you're going to get royalties for the rest of eternity if you own this asset. So that's a nice way to just enter that kind of future potential growth. If you could have owned like a message, every message that was ever sent on Facebook or every message that was ever sent on WeChat or any of these big networks, that's what you're buying when you invest in crypto assets. When you invest in the digital assets, then or like the real assets that are being kind of tokenized, that's more like you've done this for years as an advisor. This is no different. This is just kind of simplified, reduced minimums, easier access. So now maybe it's all about, well, how do we get alternative investments into our portfolio? How better do we do that? And that's really truly like the 60-40 model is like so yesterday. It's like yeah, I think I saw recently it was 3,500 companies in the Wilshire 5,000 now. So the Wilshire 5,000, which is 5,000 companies, there's not even enough publicly traded companies to make up the Wilshire 5,000 anymore, because companies are staying private for much longer. So a lot of that value accrual that we used to get when we invest in Intel when they went public, or Google and so on, we don't get that anymore. So if we're not using alternative investments, we're missing like a huge chunk of the economy for our clients. And so that's where kind of like adding some of these alternative investments back into the portfolio, it's just a different way to own stock, for example, like if I own private equity, or it's a different way to invest in fixed income assets and other assets. So yeah, I'm really excited, because I think like you said, the younger generation is interested. The money is coming and it's going to be massive, and I feel like they're going to want help. Like if I have $5,000 or $10,000 and but all of a sudden now I inherit $1 million, I think maybe I might want to get a little bit of help. So
Yeah.
that's
Exposure to different things. Sure.
yeah. And if you can just kind of communicate to that client, like, I got you, you'll still be in control, but I'm just going to help you, and give them the power to feel empowered, that's going to go a long ways again and then they're going to want alternatives. They're going to want different. They're not just going to want this like the S&P 500 and a Vanguard fund, and like they just want interesting things.
Exactly. And speaking of interesting things, I love a good roadmap question. So I have to ask, what's on the roadmap for Onramp Invest for this year and beyond?
Yeah, so so again, we started with crypto. So now you can open accounts at all these major qualified custodians. We really then, what we found was a lot of advisors wanted like kind of that index model approach. So the direct indexing, and then now SMAs with, so asset managers can truly custom build SMAs for clients of advisors. And then the Securitize announcement was a big deal for us, because again, it was like this next evolution. Like, you hate Bitcoin, that's fine, because you can't possibly say that you hate private equity and you hate all of these other alternative investments. And so really now it's like the on-ramp to everything that is alternative. So those are the really big ones, and then bringing on more and more private equity funds, and really kind of building like this Web3 version of iCapital or Case, or kind of giving everyone the access to all those alternative investments. And then some fun ones, like I would love to do a deal with Masterworks. They take art essentially, so you can invest in a portion of a Picasso or a Banksy and get that into the platform. So now clients can actually own some fine art type things. Rally Road is a company that's kind of fractionalizing ownership, and started with automobiles, but now it's everything from baseball cards to Birkin bags to really like everything. And I'd love to bring in some of those fun things into the platform, so advisors could just really have a lot of fun with that.
That all sounds great. We'll have to do a follow-up episode once all of that comes to fruition, because I would love to hear about that. But I do want to dive in to our second segment of Ask Us Anything, Eric, where I'm going to put you in the hot seat. And I've gone out to the social universe and asked them to submit questions they want answered by you. So let's check out who's dropping into the DMs this week. We did have a couple questions here. The first one being, how do you think custodial services will change in order to keep pace with the innovation in this space?
Yeah, this is a big deal. I'm here at the CoinDesk conference, and really we're part of an index committee, like an industry consortium. And the idea was, which assets should be added? Should there be a custody rule? Like, should they be available at 3 custodians, 2 custodians, 1 custodian? How do I replicate this index? Because again, it is a weird asset class. So, and with the financial advisors, they are, they have to use a qualified custodian. So that's a real big deal. But really the thesis behind blockchain is you don't need a custodian, right? It's disintermediate this custodian. So there's a lot of back and forth there. I think what you're going to find is kind of this dual model where some clients will own their assets in their own wallets and take self-custody and deal with that. And the advisors will have a look through to those assets. They can do that right now with clients via Onramp. And then they'll have the kind of qualified custodian, the custodial assets and you're seeing like Bank of New York, Fidelity does this. So there's a number of traditional asset or managers, or I should say custodians, that are kind of like letting you own Bitcoin and Ethereum now, but not any of the others. So if you want to go beyond that, you have to go to, say, a Coinbase or Gemini or Prime Trust. And then there's a couple of new custodians that are like up and coming and getting their charters now to try to get into this space. So as the SEC keeps cracking down, I think you're going to find more and more custodians that'll step into that void and help out.
I would agree there. And we actually had a question too around crypto and regulation, because historically there's been a lot of friction there, but things are starting to shift, it seems like. And trust is obviously a huge factor in the space, and especially because it's been rocked lately with several firms imploding, price volatility, things like that. So what are you seeing in the regulatory space right now that's maybe hopeful or interesting?
Yeah, well, it's always going to be challenging. At the end of the day, I fully appreciate how difficult it is for the SEC, because here again, you had all these people that there was tons of capital raised. Well, that sounds very much like a security offering, right? Whether private or public, it's still you raised money for a project. And so the SEC says everything is a security. And at the end of the day, we also have this weird structure where we have 2 regulators. So we have the SEC and the CFTC. That doesn't exist elsewhere. And they're in this turf war of who gets what and who gets to regulate what. So we have that complexity. Plus we also have banking regulators and state regulators. And so we have this whole soup of regulations. It's really challenging to meet any of these, especially when there's a brand new technology. When Uber first came out, Uber's a great experience. Like if you get in a yellow cab and you get in an Uber, it doesn't, one is much better than the other. I think they broke every single state law that they did business in, because they were, it was like nobody had contemplated that kind of technology, but it was just such a good experience that they changed the laws to accommodate that kind of technology. So that's what we're going to find is some new laws are going to get created. I really like Hester Pierce. She's commissioner, or one of the commissioners. She's kind of proposed this like a safe harbor. So yeah, if you raise money, you got to follow the securities laws, you got to have disclosures, but eventually that network gets decentralized enough to where you're no longer really you have nothing to do with the project. You could even leave the project and the project continues on without you. That at that point, then it now becomes a commodity and it should be regulated under like different regulations. I love that. I love that concept. That's like, that would be fantastic. But until we get that, it's going to be, again, it's going to be a challenge, and it shouldn't be. If you're an advisor and your client asks you, hey, I'm looking to sell a property or buy a property, you'll say, well, obviously I can't help you with everything, but I can help you think through the money concept of it. And so you shouldn't be afraid, oh, that's not a security, I can't advise on that. You can still offer your clients advice on anything, whether they should buy a car or not, and it doesn't have to be a security. It doesn't have to not be a security. It can just be part of the client's overall financial portfolio. That's I think how people need to think about it, and worry less about the regulations of whether this token is or isn't a security, and worry more about just offering their clients smart, rational advice and kind of billing for financial advice. That's not a problem. It's just the fear of maybe the SEC is going to do something. I think that's the wrong approach. I think, again, we're not putting the cat back in the bag. It's out. So
Yes, I completely agree. And it really should be part of that really holistic financial plan for advisors having these conversations. So completely agree with you there. We had one final question for the segment, specifically focusing on crypto again, but what were your biggest takeaways and learnings from the challenges crypto faced this past year?
yeah, it's hard to imagine that it's only been a year. It feels like a decade. It really is, and it's kind of, there's a like an organic nature to crypto because there hasn't been a lot of regulation. So yeah, I think of it almost like, viruses or cells that they replicate and they figure things out and some die off and but it's almost like competitive nature. You get the best out of everything. I think a lot of these struggles have created just every single one of these bear markets that the crypto's gone through. They just create a more robust ecosystem and infrastructure, and also a more robust investor. Like getting 80% of your value wiped out in a minute, basically like in 3 months. I don't. Most of the investors didn't panic. They didn't freak out. They just it's like took it as par for the course. That's what happens in crypto, and that's that's a counter to the average investor. The average investor is get me out at all costs when the stock market
Right.
drops 20%. Where these investors are like, all right, that's how I roll, and so it's made like a really strong, like confident investor audience, and I love that. And same thing with companies, that are kind of in the space, like, okay, so we better expect volatility here. So the more we try to like take away the volatility, I think the disservice we bring to people, it's like it is volatile, it is raw, there are scammers, so look out, like be careful and take ownership of this stuff and go in with eyes wide open versus don't worry, we'll protect you, we'll save your bank. I really appreciate that piece of the crypto, and I hope that always stays raw in that regard. But I get that, if you're a financial advisor, you don't want that for all your clients. So then it just becomes an opportunity on how you can mute some of that volatility and some of that noise and nonsense that's going on out there.
Well, it's not truly innovation if there isn't a little pain associated
That's
with
right.
it, right?
Yeah.
Well, Eric, I appreciate you being put on the spot and your insightful answers here. We have come to our final and my favorite segment, which I call Stack It or Whack It. And I'm going to throw out a few technologies. Be warned, they aren't always WealthTech related. And you tell me if they are essentially worth the hype or not. I might know the answer to these based on our discussion already, but the first one I want to throw out is blockchain. Stack it or whack it in its current state in the industry.
Love it. Yeah, stack it. It's fantastic. And we're
I know we
just getting
talked about it
warmed up.
earlier, but yes, exactly. That's the thing, is we're just getting warmed up. I think we still have yet to see the ultimate use cases of it, but it's coming.
Yeah, this is like the days of dial-up internet, right? It's where you'd have to wait like line by line as the image came across the screen in an email. Yeah, so it's going to get much, much better from here.
All right. The second one I want to throw out is kind of a big concept, but DeFi. Stack it or whack it.
I love DeFi. It is, talk about raw. It is so
Mm-hmm.
raw, but I really see a ton of opportunity. You're seeing even like regulated companies like JP Morgan and others that are getting involved in this because again, this is cool. Like this is really true kind of disruption. Absolutely no intermediary. People are borrowing, lending, collateralizing, like so many opportunities there. Really, really raw though. Very, very raw. And
All right.
if you get a chance, I would just say to the listeners, like, try it. Just buy $10 worth of something and put it into a DeFi and then play around. And it's just so cool. You're doing it on a Sunday night. You're not like dealing with a bank, it's just so cool. So yeah, I definitely think that people should play around with this technology. It's got a lot of promise.
All right, 2 for 2 on Stack It's. I appreciate that. Eric, it's been an absolute blast getting to talk with you. Feel free to tell listeners where they can find out more about you and what you're working on at Onramp Invest.
Yeah, so the website is onrampinvest.com. If anyone wants to follow me on Twitter, I'm Ervin at just Ervin1. So yeah, feel free to reach out. I'm really, really excited about the space. I think it has a ton of opportunity. So love to talk about it all the time.
Awesome. Well, sounds great. And be sure to like and subscribe to the WealthStack podcast on all major podcasting platforms and follow all things WealthStack on wealthmanagement.com, LinkedIn, and Twitter. Thank you all for tuning in today. Today's episode is sponsored by Wells Fargo Advisors Financial Network FiNet, member SIPC. FiNet is focused on helping independent advisors support their clients and reach their goals with unique, ever-evolving solutions and resources from one of the nation's largest financial institutions. Learn how you can get more with FiNet at wfa.com/independent. That's wfa.com/independent.